everyone. Welcome to another weekly webinar with Just Us Retirement. My name is Tabitha Justice. I am the owner of Just Us Retirement. And I am here with a very good friend of mine, Harold Veely, and he is going to teach us about life settlements, which I know nothing about, Harold.
That's good. Yeah. Well,
Um,
not very many people do, Tabitha. Really, it's not new by any means. I mean, it started back years and years and years ago, but it's becoming very popular right now with people that have life insurance policies and they don't know what to do with them.
mhm.
Uh, it's, you may have an insurance policy that you no longer need, or an insurance policy you can't afford. And this is the perfect solution if you have one of those policies to sell that policy to a funder, an institution. And I'll go into how we do it if you want to ask me some more questions or
Yeah.
not. I can just run on about it. I've been doing it for quite a few years. I can give examples. I can tell you how it's done, the proper way it's done, how long it takes. And some people may have heard Coventry. I'm sure they've seen that on TV or whatever.
Mhm.
It's like Coventry, but I represent so many different institutions, Wells Fargo, Brookshire, and I find the best funder for the particular policy that I'm trying to buy. Yeah,
Awesome. Well, I'm excited to get into all that because I think most people are like me and like we've heard of it, but we don't really know what it is.
yeah.
Um, so before we get started, just to tell you a little bit, the audience about who I am. Again, my name is Tabitha Justice. I'm the founder and CEO of Just Us Retirement. And what we are is a collaborative and education focused retirement company. So, what that means is we love to spread education and we are very aware that we don't know everything. And so, we like to partner with other professionals who are experts on topics and provide education together, which is what we're doing with Harold today. So, I'm excited to learn about this. Harold, I want you to one, tell me a little bit about yourself. And I see a whole bunch of medals behind you. I'm curious about that too.
Well, I don't know if you read in actually the newspaper today. We were honored, myself and four other guys. We play basketball in the Senior Olympics, and I play in the 85 to 89 age group.
Wait,
And
so you
yeah,
got to stop there. How
yeah,
old are you
I'm
first?
86,
Crazy.
and
Love
we
it.
still play. We played 7 games in 3 days, and boy was I tired. But they Senator Manchin honored us yesterday behind the old Stonewall Jackson High School, and the mere fact that we all went to Stonewall, we all went to school there, and
Really?
we're the only ones in the national uh, senior Olympics that are from the same state and the same high school. So it's quite an honor. Yeah,
Yeah.
yeah.
I
It's over Facebook. If anyone wants to pull my name up and read about it, if you don't have anything else to do, go ahead and do it.
well, I just love like there's two things right now that I'm just so excited about. One, the fact that you're 86, you're still incredibly physically active. Like you are the epitome of what we're trying to encourage people to do. Age is just a number and it's what you make
Oh,
of it.
right, right.
And then two, you're 86 and you still work.
Oh,
Why
I
are you
love
still
working.
working?
Well, I've always been in the insurance business, and then I found this uh, life settlements. I got into it. I'm still doing the insurance business, of course, but life settlement is it's a wonderful, wonderful thing for people, especially as they get older. And they have these insurance policies. They buy the insurance policies normally when their children are small or when they buy a house and so on. And a lot of times it's term policies, and
Mhm.
the term will run out in 20 years, and they just give the policy up. They don't want it anymore. They don't want to pay the premium. I can take that policy and see if I can find someone who will buy that policy, and they would be the beneficiary and the owner of the policy. You will have nothing more to do with it. and we'll give you more cash value than you can imagine. But a good, it's according to your health. In
Right.
this case, the worse your health is, the more payment you get. Whereas when selling insurance, you want to be in very good shape to get the insurance. So it's just the opposite of buying insurance and selling the policy. And I can give you plenty of examples, and I will give you one or two. I had this one guy, very well known locally here,
Mhm.
and he had a large policy. It normally it's not this large, but sometimes it is. He had a $3.5 million policy,
Wow.
and it was premium was quite large, and he had kept it for several years, and the cash value was building up. So he let the cash value pay the premium,
Hmm.
and the cash value had been paying it for years, and he only had $20,000 left in it, and he was going to give it up. He said, Harold, I might as well take the 20,000 because I'm not going to keep it. I said, wait a minute. I said, let me see if I can find a buyer for that policy.
Yeah.
I found a buyer. I went through a local attorney here in Charleston, and we found a buyer, and I was able to give him $700,000.
That's crazy.
So not only did uh, his family was happy about it,
Yeah.
I mean, because they were going to get 20,000, but the funder who bought it, unfortunately, the man died within 3 years.
Oh.
So they still made the funder still made a couple $1 million. So the only people that or the only company that got hurt was the insurance companies. Now, mind you,
Right.
the insurance companies don't like people doing that because they want people to lapse the policy because 90% of the people that buy life insurance will
Hmm.
let it lapse at some point. So they really don't like life settlements. But I can show you. I got an article from the Law Journal that lawyers are being remiss if they don't recommend someone to sell their policy rather than just give it up.
So that's really interesting because as we go through those slides, I've known you for decades
Yeah.
now. And
Before your
yes,
daughter,
yes, you knew her when she was the baby in my belly.
I did.
But that is actually so I didn't know as much about what you did on the settlement side, and I actually had two attorneys that said like you got to have Harold on there to talk about life settlements. So I think that's really interesting. So let's go through the
Yeah,
basics first.
yeah.
Let's go
Talking
through.
about attorneys, that one that works with you, Rachel Carrico.
Mhm,
She's very knowledgeable about life settlements, so
mhm.
she could help anyone on the life settlement side. That's a
Well,
plug
maybe
for Rachel.
I'll have to do another one with Rachel. So let's start with the very basics first.
Okay, the very basic is, and I'll just go over it rather than just kind of read it. I'm encouraged to just ad lib a little bit because it comes
Sure.
naturally to me. It's
Yeah.
just rather than surrender the policy, we find someone to buy the policy. Now, if it's a permanent policy, where it builds cash value and so on, we always give the insured more than the cash value.
Okay.
So, yeah, but if it's a term policy, we'll take that term policy and convert it to a permanent policy and then sell it. The insured does not have to have a exam or anything.
Mhm.
We will take it and uh, we'll get the medical information. You'll sign a HIPAA form. We'll get your medical information, and we send it to 3 life expectancy companies, and they'll give us a determination of how long they expect you to live. Just to keep it up front and everything, if you want that information sent to your personal doctor, we'll do that and let them look at it if need be.
Okay.
And that's on the first slide. That slide right there. If we have any more, I'll just kind of go along. There again, we're talking about it's known as a life settlement. Now, there is a viatical settlement, if someone is going to die within 6 months, and that's far different than this. This is
Oh,
life settlements. You're alive. You're expected to live, uh, you know, 10 years, 12 years. Normally, if you're going to live 12 years or more, it's hard unless you have some, the premium's so low that you can't sell it. But I determine from the get go when someone calls me if it's worth pursuing. No cost to the insured, absolutely none at all. You call and you give me the information, and I'll just tell you within days whether if we should pursue it.
so I've
Now,
already learned something. I honestly thought the only type of life settlements were if someone was passing away. I had no idea until you just said that you could do this up to a decade or more in advance. That it's now opening up all these conversations I should be having with some of my retirees that are giving up these huge policies because they don't need it anymore. So that's
it's funny.
really
Yeah, excuse me. It's funny you mentioned that because I'll be sitting at a restaurant or bar or whatever,
mhm.
and people will ask me about it, and the more I talk about it, they want to buy me another drink because they want to hear more. Because you can see smoke coming out of their ears. I mean, just like a light bulb goes off in their head. Like that's it's almost too simple. It really is.
Yeah.
Why wouldn't a person do it?
I know that's really, I mean, I'm thinking about all these people now that I know they're giving up these huge policies. I don't know. We're gonna have to talk after this too.
Yeah. Well, let me give you an example. Younger people will think, well, my mother and dad had an insurance policy. I wonder what they did with it.
Hmm.
Did they give that up or are they going to give it up?
Hmm.
That's something to open up a conversation with your parents
Yeah.
because they can take that money. Let me tell you, I know I'm on a roll here, but that's okay, isn't it?
Yes, of
You,
course.
you, you can take that money and use it for long-term care. You
Hmm.
can use it to go on a cruise. I mean, you can use it for anything you want to. It's your money. You can do whatever you want to. And and I will give you some information. For one of the first things, would you pay taxes on it? That's the first question.
Yeah.
No, but you will pay taxes on what the cost basis, what you put in it and what you get out of it.
Hmm.
That's what you'll pay taxes on.
Hmm.
It could be minimal, but if you get a big settlement, what do you care if you pay? I mean, you're going to give the policy up, you get a big settlement, you pay a little taxes. Hoorah.
So you it's okay to tell me that if you're going to talk about this later, but I'm automatically thinking about some people who are maybe on like a group employ or a group life insurance
Good question.
policy.
Very, very good question. I'm glad you brought that up because sometimes I'm remiss. A group policy normally gives you an opportunity to convert.
Hmm.
And if that's the case, say you had a group policy for years and actually they'll give you a chance to increase the coverage.
Hmm.
And say you increase the coverage and then you left the group, you have the option to convert that policy to a permanent plan.
Hmm.
That's when I come in and say, let's see if you can convert it. If you convert it, let's see if we can sell it. I pay the conversion. You don't pay a penny. No,
Wow.
nothing out of your pocket whatsoever. And then I try to sell it. So good. I'm glad you asked that question. You're catching on.
I'd like to think I'm a fast learner here. Yeah, because I'm thinking right now there's two guys that I'm working with who they work for the same company and they have because it is very common when someone is working that the employer has with them a group policy of three times their income.
Right. Right.
Um, but when they retire, often they're like, I don't need that much insurance, or they'll say, I just don't want to continue paying for this
Exactly.
because now I
Exactly.
have to pay for it. And I'm going to make a phone call when we're done with this and set them
Well,
up
I'll
to.
give you another thing to do. Let's say that you have a key man in policy. Key man in policy. A
Mhm.
key man insurance policy is uh, someone that may work for you and they really run the business for you, and you sit back and kind of orchestrate it, but they run the business, and you have an insurance policy on them,
Mm-hmm.
you can take, when they decide to retire, you can take that insurance policy and try to sell it, and that will be their retirement then, rather than.
I've never thought of that before. Harold, that's such a great idea.
I'm working on one right now. Right now, it's a $500,000 insurance policy,
Mm-hmm.
and the employer went bankrupt. And now uh, they're trying to keep that insurance policy out of the bankruptcy, but I don't think they can. But that $500,000 policy, I got a couple offers on that, and I got one offer of $40,000 for that policy. They were going to give it up. In
Yeah.
January, it was going to lapse.
I'd be happy if someone gave me like $500 if I was just going to let go of it.
Yeah. And it doesn't cost you anything to find out. It just takes me a little time to do it, and I'm glad to do it. I mean, it's you can see my excitement. Here I am, an old sucker, and still get excited about it.
But this is why you're 86 and still working, because
That's
you
right.
love what you do. It's important to love what you do.
Yeah.
So
I
I love it. I think we already kind of went over, let's see. I think we kind of went over a lot of this. Oh, let's talk about this.
There again, they ask you, it doesn't sound right. It just doesn't sound right.
Yeah.
Well, there you go. In 1911, it was deemed that it is right. So that's how long. That's how far they said it was okay.
So were these more prominent now than they used to be?
Oh yeah, you see Wentworth and you see Coventry on TV all the time.
Yeah.
But you're dealing, anytime you deal, as you well know, even when you buy life insurance, you buy it online or whatever, you lose control of calling someone up that you may see every day or see at a restaurant or whatever.
Mm-hmm.
And you lose that contact. Mm-hmm. And a lot of times you do that, and they go through several different processes, and believe me, the process they make money on it, and you don't make that money. So just to give you a heads up, but yeah, you can switch it again, and we'll go. Just the history, it tells you a little bit. You can do what you want to. It's like you can take your money and do whatever you want to with it. I mean, it's your policy.
That is so interesting.
And there we go. Now this is very, very important.
Okay.
Really, it got prominent in the 80s, 1980s, when people got AIDS.
Okay.
And they had an insurance policy. And what they do, they sold those insurance policies because they wanted to find some medical to get well. I mean, something, and to pay their medical bills.
Mm-hmm.
And there's really a TV show, very prominent. I think Matthew McConaughey plays the part, where he did have AIDS and he sold the policy and so on. Very, very interesting. But that's where it really, really became very prominent.
Interesting.
Yeah, it's a win-win. The AIDS patient got the money, needed investment, mm-hmm. and eventually the company that bought it, they got their death benefit. Yeah.
Interesting. Yeah, so I feel like there's probably a lot of myths, because I've always thought life settlements were bad. I don't know why I had that idea. It was just, that was my thoughts on it. And then all these elder law attorneys were like, are you crazy? They are not bad.
Oh, I know it. I talked to a lawyer just yesterday.
Mm-hmm.
Yesterday. He's a bankruptcy lawyer here locally. And he said he wanted me now. I explained it all to him because we're working with that one case I was telling you about.
Yeah.
Working on that. And he said he would like for me to come and talk to his law firm. I've done several seminars. I did one at Edgewood, one at Berry Hills, to financial planners and bankers. And I'll give you another thing. A lot of people will have their money, and the trust will have it at a bank.
Mm-hmm.
The trust and the trustee will take care of all of it, and they'll have an insurance policy, and the cash value will pay the premium year after year after year.
Mm-hmm.
Eventually that runs out. had that trustee would come to someone like me and try to sell that policy and give it to the person. It's, I see smoke coming out of your ears.
Yeah, there's so many ideas that I have with this. But this is just proof, right? Because like I try to tell my people all the time when it comes to financial planning, and I always ask, come to us with an open mind, because there's so many myths about how Medicare works, how long-term cares work, how things like annuities work. There's just so many things that are hugely misconstrued. And here I am taking my own advice here. I'm glad I came into this with an open mind, because I was wrong.
Yeah, yeah, yeah. You don't have, and the mere fact, there you go. The financial organization by it.
Mm-hmm.
Warren Buffett. This is what Warren Buffett does. He buys thousands of policies, and that's what makes Berkshire, part of their income. He's for years bought thousands of policies. So that's just to tell you, it's not an individual that buys it; it's an institution that buys it.
That's interesting.
Yeah,
So
this is no market risk. Yeah, that's one of the other things that I told you about the tax. The taxes. Believe me, it's highly regulated.
I'm sure.
To do this, we have to have everything notarized and everything. It takes a lot of paperwork.
Because like I could be off on here, but I'm guess you have to prove also like you're not forcing someone to do this or tricking them into it. Is that part of the regulation?
Well, yes, it is, and we have to have the signature of the beneficiary.
I hadn't even thought about that.
Yeah,
okay.
Yeah. You might have a wife and or whatever, and they may be against it. And well, if they're against it, we can't do it.
That is so interesting.
Yeah.
Another one of those myths that you just busted for me.
Yeah, it's normally okay. It's normally someone who's 65 and older and $100,000 or more.
Okay.
So very, very rarely will I get one under 100, but I do. Let's just say that someone is very poor health and they can't keep the policy. Maybe it's going to run out or whatever. I can sell it. I've done it. I've done $50,000 death benefit policies. They don't make much, they make $3,000 or $4,000, but they were going to give it up.
Hey, but you know what? Like sometimes that $3,000-$4,000 is like them being able to fly in family to see them, or
exactly.
Yeah, it can be a really big difference. And, I'm even thinking back to, I know this is not the same thing, but like I had someone that had a cancer policy and they got cancer. It was just little teeny tiny bit of cancer. It wasn't anything serious, but he got $40,000 from his cancer policy. And you know what he did with it? He took his entire family. It was like 30 some people on a life celebration cruise. He was in his 90s and he was like, I just got this lump sum of money. My family doesn't need it. This is my chance to celebrate. And I'm thinking about all the ways they could do that with life settlements too.
I'll give you another great example too. I went to not a church. I actually went to a synagogue, and I presented this and so on. And I asked him, I said, how many people here have the synagogue as the beneficiary? And half of them put their hands up. I said, let me ask you something. Do you think if you took that insurance policy and sold it and got some money and gave it to in this case, the synagogue, do you think they would accept it? Well, sure. Yeah. I said, what could be better than the synagogue would take that money and build a gym up there, Justice Gym. And you drive by there every day, you'd see your name. And I did that while you're alive.
Yeah.
I mean, think about it.
Yeah, that is, there's just so many ideas that I've never ever thought about now.
Mhm.
We kind of already went over this, didn't we?
Yeah, financial advisors and so on. Yeah. And this is an example. A 76-year-old male, $5 million life insurance policy. It was 20 years, and it was owned by a trust-owned policy.
Okay.
And I was able to, you know, it, take it out of the trust and sell it. I mean, it was real easy. I talked more on that one to the bankers when I gave one of my seminars. Yeah,
Okay. All
yeah.
right. So let's see. We kind of went over that.
Mhm.
Let's see. Okay,
Yeah,
so
yeah,
how,
yeah,
walk us through the process.
yeah,
I
that's
have,
it.
we're going to say I have a $5 million policy
Mhm.
and I just don't need any more because I am independently wealthy. Who
Right,
needs $5 million?
right, right.
You know, what do I do? Like if I want to talk about this, what do I do?
Okay, you have to be 65 or older normally,
Okay.
unless you're 50 and in poor health or whatever. Okay, the first thing I would do, I would take that in, I would get the information, I would find out how much the premium is.
Okay.
First thing, because if the premium is very high and you're going to live 10 years, it's not a good deal for the institution because they'll spend all the money they give to you
Hmm.
and so on. But let's just say that your life expectancy, the premium was pretty good, and your life expectancy was uh, uh, less than 10 years, and you say it's a $5 million policy,
Yeah.
you
We're
could get,
going real big.
yeah, yeah, say you could get half, you could get 2.5 million on something. It's according to your health.
Right.
Every case is different, and I won't project that. When I talk to them, I'll give them a true estimate of what I think.
Okay.
Then I back it up, and it costs me to get these life expectancy reports. It costs me. I do it,
Okay.
and I get these reports, and that's when I make my determination. I see the premium, I see life expectancy, and then I'll find out how much you'll be able to get. And if I don't think it's high enough, I will go to several institutions. I won't just go with one.
Okay.
I won't go just to Coventry. In fact, I beat Coventry every time when I'll find out after Coventry made a offer and I get it. I beat them every time
So
because
are
there's
you
so much
kind of a
selling
broker
between.
in a way? Are you a broker for
I'm a
this?
broker. I'm a broker.
Okay.
Yeah.
Interesting. And
Mhm.
for those of you watching that don't know what a broker is, a captive person works for a company. A broker, more or less, we work for you as a client and we're licensed with lots of different companies.
I am licensed, and I work for the person. That's
Yeah.
my job.
A
Yeah.
captive agent often, like, again, just for education for you guys, a captive agent works for a company and their legal obligation and everything is to a company.
Yeah.
Whereas brokers like Harold and I, we work for you as a client, and
Right.
that's where our
Right.
legal obligation is to
Mhm.
you as a client.
Yeah. That's exactly right. And
Um,
yeah, it just there. It talks about the LEs,
oh, sorry.
life expectancy. I work with CPAs.
Hmm.
Uh, I'm working now with a CPA. CPA brought me a case right now, and this particular person's a doctor, and and he's divorced. He doesn't need the policy anymore. He's old enough. He's retired. He's got some health issues, and I'm in the process now of selling that policy.
Okay. Very cool. Learning a lot of stuff.
Yeah, that
Um, we
there
kind
you
of
go.
went over
Yeah,
this.
I normally I've been doing it so many times I don't look at it. I come to it and do it ahead of time. Yeah,
That's okay.
yeah, yeah. Oh yeah, that's another thing too. Um, we will put your money in an. We'll give you an offer, and we'll put the money in an escrow account until you sign off completely. And when you sign off, that comes out of the escrow account because what we have to do, We have to change the ownership and the beneficiary with the insurance company before you get the money.
Mhm.
That's why we put it in an escrow. And as soon as the company, the insurance company, makes those changes, within 2 days, you have the money out of the escrow.
So I'm curious now, timeline. If this is something that I want to talk to you about, like how long is the timeline from the time that I'm like, all right, I want to look at this, Harold, and I want to actually see if I have an option to following through and paying out. What is an average timeline?
Okay. What we do, the insurance companies sometimes hold you up because we have to get a in-force illustration.
Hmm.
That's the first thing. How much it's going to cost to 100, age 100,
Okay.
and how much it's going to cost. And they usually sit on their hands getting the information because they know why you want it.
Hmm.
And then we will get the LEs. That doesn't take, it takes a week to 10 days. If everything goes perfectly, it's a process that takes about a month.
Okay.
But sometimes the insurance company holds it up. And it'll take a month and a half or whatever. But you'll
That's
have an idea of what we can do
yeah.
within 2 weeks.
I mean, I was thinking this was going to be like a 6 to 9 month process.
No, 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 not at all. No,
Again,
no.
me and assumptions, right? Like
Right.
you're busting them all today. So for the most part, they got to be 65 years old, 100,000. And then we kind of like briefly, I know the answer to this, I think, but you've caught a lot of my other myths. I think it's important for us to explain why we want them either, or why you want them either 65 and above or with bad health. I mean, I know it's a simple math thing, but can you explain that?
Right. Yeah, just of course they're 65. There's more chance that they'll die sooner than someone's 50, of course.
Mhm.
And the poor health, that means that they'll die sooner, and
Right.
therefore the funder won't have to pay as much money into it. Now
I
the
mean,
funders, they get fooled sometimes. Sometimes the funder will pay more than what they gave the insured,
mhm.
and but they bite the bullet. That's the way it is. But if they buy 1,000 policies, there may have one or two that way, but most of them will die within the projected life expectancy.
And we're not like I can see where people would look at this as like, oh, they're taking advantage of death, but we're all gonna die. Everybody
That's
dies.
right. I mean,
Yeah,
morally, you can make a case for it morally.
yeah,
I mean, it's the way it is. I mean, you face it. I mean, it's like you say, somebody's going to die sometimes, and somebody's going to benefit by it.
yeah.
And
So,
but why not get the money now?
all right, Harold, I have a very important question for you.
Yeah.
Are you planning on living to 90, 100, 110? And what are your birthday
Well,
celebrations?
my mom and dad were 90, and I have a sister now that's 90, and one of the guys that plays with me, he's 80, he's 89, and I have two guys that are 88, and I'm the young guy at 86 on our team.
That's amazing. Do you have big birthday plans for your 90th?
No, but I had a party for my 70th and my 80th.
Love
Yeah.
it.
I'll
Love it. Love
probably tell you my theme of the party sometime.
it. Yeah, we'll do that off camera. So this is kind of what we talked about is, between 25 months and 20 years. And then, so to your contestability, that makes perfect sense in case someone lied on the application. So that completely makes sense to
Yeah,
me.
yeah.
Do you want to go through all these? Because I feel like
No, it's pretty much covered. It could
yeah,
be
I
a
think
term,
we did
whole life,
good.
universal. Who pays the premium? I did. Who buys the policy? I did. I went over those. Yeah, pretty
Yeah,
much.
so
These
I
are when I do seminars. I'll tell the people I'm going to ask the questions, so I'm going to give you the answers. I do it both times. Yeah.
I think this has been incredibly informative. I'm kicking myself in the butt for not talking to you earlier about this. I'm
I
so
try to.
I know. But Harold, this is the perfect example because I have, like I said, I have people all the time with retirement planning that they have heard certain things and they're not open to discussions about things that would benefit them.
Yeah.
This is another example. I had just in my brain, I had that life settlements were not great. So I didn't set the time aside. And now I'm thinking all these people I could have sent to you.
Well, let's say again, someone had say $1 million policy, and they don't need $1 million, but they need $500,000. Sell half of it.
You can do that?
Yeah.
What?
Yeah.
It's crazy.
Yeah. And it's a lot of people with federal estate taxes, a lot of people years ago, and the exemption was, they bought insurance to pay their federal estate taxes, which they don't have to do as much now.
Mm-hmm.
And they would buy a second to die policy.
Oh, yeah.
Well, the first one would die, the husband would die, the wife's sitting there with that second to die, sell that one. I've done that.
Well, you just reminded me of another video I need to do because a lot of people don't even know what second to die policies are. So
right.
I'll have to do that at some point.
They're not done as much as they used to because the exemption is far, more and more than it was. It's 1.1 million now, I think. I just don't know the exact figure, but that's what it is. Yeah.
So, Harold, if someone wants to get a hold of you to learn about this, obviously they can call my office and I'll connect them. But what's the easiest way to get directly to you?
Just call my number, 346-2154, 304-346. And if you want a few chuckles, get on my Facebook. I resembled the Dos Equis guy, and I got a lot of response on that back years ago.
I remember that.
Yeah. And so they can, do either one. Yeah.
All right. Thank you so much for doing this. This has been wonderful, and I'm excited to get the word out. So
yeah, well, good. We can work together.
Yes, sir.
I've known you for a lot of years.
I know. And it just shows too, like you never know who's going to come back in your life and play significance.
That is. You're true.
Yep.
That's exactly
Don't
true.
burn bridges. You never know.
Yeah. Yeah.
All right. Well, thank you guys. For anyone who's watching, if you want to learn more things like this, please go to our website, justusretirement.com. You can click on the Education Hub, and we have tons of different videos that we've done. You can also go to our calendar, upcoming events. It will show you all the other weekly webinars we have, and you can go to our YouTube and see even more videos that we've done because we love education here. So thank you guys. Have a wonderful day. And thanks, Harold.
Thank you, Tabitha.